Hey everyone, it's Matthew Haraburda here, the Chief Investment Officer at Bernardo Wealth Planning. Just wanted to take a second to send a follow-up video to what Nick had sent out the other week regarding the Trump tariffs. Since that time, we've obviously seen continued uncertainty and volatility in the markets, primarily driven by a lot of the things that the president has been putting out there. Just on Tuesday, he talked about increasing tariffs from 25% to 50%, specifically on Canadian aluminum and steel. And while we can go through and look at each individual headline and digest how we think that's going to impact the markets, we thought that it might be helpful to zoom out a little bit and take a longer term view. And before we do that, one thing that I think has been very interesting this year is that this sell off has mostly been self inflicted. We've yet to see really any crack in not only the underlying consumer, American consumer, or we've not yet seen really any crack in corporate profitability. And while there has been individual stocks or individual sectors that have become out of favor, obviously we've talked about resetting expectations at the beginning of this year. I think you've really seen that with regard to the Magnificent Seven, and there's been more of a preference towards defensive stocks that are more value oriented, just like we talked about at the beginning of the year. But we've yet to see any real weakness in either of those, the underlying consumer and corporate profitability. So that being said, a lot of these headlines that are coming out, I think that it likely makes it difficult for not only the consumer to feel confident in their spending, but obviously if you're a small business owner or you're the CEO of a Fortune 500 company, you're going to have less conviction about making not only short-term investments, but long-term investments. Um, but I just want to remind everyone that this is just a very short view, but I know that when markets are trading down, it obviously feels worse. So that's why I thought I wanted to bring something up talk that we have planned for this. Our friends at Dimensional Fund Advisors, I thought, put out a great research report this week where it talked about if you look at the largest intra-year declines for the U.S. stock market in every year from 1978 to 2023. So that's looking at 45-year period from the largest decline in any given year. The average is the market trading off about 14%. So that obviously seems like a large number. But I think that it's also really helpful to think over a 45-year period. That's not an infrequent thing to happen. So volatility and uncertainty is something to be expected in long-term investing, but we don't let it impact us on a day-to-day, week-to-week, or even year-to-year basis. The punchline or the conclusion of that report is that of those 45 years in total, 37 of them actually ended with a positive return for the year. So that's something that we take comfort in. Again, we're planning and investing for the long term. And while the uncertainty and volatility feels uncomfortable on a day-to-day basis, we don't let it really dictate our long-term investing decisions. So if you have any questions, please feel free to reach out to myself or your advisor, and we'd be happy to talk. Thanks.